You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where we break down everything lighting it up. On the other side of the fence, the commodity and futures options side of the fence, they're going to talk. Maybe, who knows what's going to make it on the show? You got to tune in every week. Maybe metals, maybe ags, maybe energy, equities. Who knows? Fluid milk, lean hogs. So I got to tune in to TWIFO every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network, seeing so many new ear holes joining us every month here on the network. I want to remind you, if you like what you hear, keep rating and reviewing us on your platform of choice. It really does help those new people continue to find a reliable place to turn. We'll keep you engaged with these markets. You're going to get a couple of shows pretty much a day. So if you're just listening to the TWIFO, you're missing out on a whole bunch of other good stuff on the network. Of course, keep those questions and comments coming too. We do love to hear from all of you guys out there. Let's see who we're hearing from on the program today. First, let's go back out to the tranquil and probably snow-covered FTSE Russell studios right now, where I'm joined once again by Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the program. A, and B, how's the snow count out there in the FTSE Russell studios? Because I know I just checked right before the show, and down here in downtown, it's pretty much a whiteout, sir.
First of all, Mark, thanks for having me on the show. It's great to be here. And it is coming down. We've got probably 14, 15 inches on the ground, but you can't see more than, let's say, a half a block in front of you as I look out the windows of my home. It's coming down, and the flakes are big, which tells me that they're heavy. So we'll be careful shoveling this stuff today.
We should make our own little snow futures market to bring back the old CME snow days there. Whenever it used to snow, listeners, there'd always be a hot and heavy market in snow futures getting quoted by the guys over there on the CME. And also joining us, speaking of the CME, joining us in the old CME hot seat today, Mr. Todd Colvin, the Senior Vice President of Global Institutional Sales and Business Development from Ambrosino Brothers. Todd, welcome back to the TWIFO program, sir.
Thank you, Mark. It's good to be here. And yeah, the snow is really coming down, so it could make for an interesting commute home, that's for sure.
I like my commute to the studio. Nice and short and easy here as we kick things off the way we want to do with our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, let's do it. As always, you guys can generate your data and follow along with the show, not just on the live stream on Mixlr, but via cmegroup.com/TWIFO, TWIFO. TWIO This Week in Options also works. That'll get you to this week in report. It'll show all the moving, all the shaking, all of the skew changes, the vol, all the good stuff that we're going to talk about here in a minute. But let's kick things off. Let's look back at the week that's been since our last show. See what's dominating the tape to the upside and to the downside. Todd, since you're our guest, I'll give you pride of place, sir. Where should we begin our journey this week? To the light side or to the dark side, sir?
Let's take things with the light side to start off. Let's get some positive news.
All right, get some positive. I got you. It's one of those months where we probably could use a dose of positivity out there. Let's go to the upside first. Sean, it was an active week for the Russell 2000. Just missed the cutoff there. It comes in at number 6 this week. Up still a whopping, a mind-numbing 4.6%. Listeners, this is a major index, moving nearly 5%. These are the times we are in, listeners. That means the actual top 5 have to be even crazier. So number 5 to the upside this week is heating oil, up 5.44%. Number 4, Brent. I'm seeing a bit of a trend here, up 5.67%. Number 3, nat gas, up almost 6.5%. It was in the exact same spot last week, number 3 as well. It was up 7.09%. So a good couple of weeks for nat gas over here. Number 2, our old friend WTI. I have a feeling we may be visiting that one on the show today. Up 7.03%. What could eclipse that to the upside, you might be asking? Well, it's that old volatile saw there. It's Bitcoin, up 14.06%. So yeah, Bitcoin getting a little bit of the luster back that it had lost of late. Let's go to the dark side. Now, actually, it's another week where it was pretty impressively evenly distributed, except for the far bit of the upside. Bitcoin's kind of outpacing everything on the chart this week. We take everything else off, take that off. Everything else is kind of lining up nicely. The bottom 5 here, we got the Ultra Bond there, number 5, off 2.09%. Number 4, another rough week for rough rice, off 2.46%. Number 3, gold, off 2.6%. Another metal you guys have been fixated on this week. Maybe we'll get to that one this week as well. Number 2, our old friend Class 3 milk, off 3.6%. And number 1 to the dark side was iron ore, off almost 4.5%. Same spot last week. Number 1 to the dark side last week as well, off 4.25%. Again, before you ask, not a lot of options paper really dominating the tape out there in iron ore. Let's add a wrinkle to our movers and shakers. Let's look also what's moving and shaking from a volatility perspective over the course of the past week. Let's start in the red camp because it seems like there's more movement there this week. So what's declining this week from a vol perspective? Looks like we have a combo of a couple of things. It's mostly silver. Silver is leading our vol decliners this week. Number 4 is the silver 90-day contract. That's off about 4%. Number 3 is the silver 60-day contract, off about almost 5%, about 4.5%. Number 2 is nat gas 30-day. So nat gas sneaking in there, off nearly 7%. And then the 30-day, the front month silver contract, off about 7%. So silver vol coming in pretty aggressively. I think we'll get to that maybe a little bit later today as well. On the upside, there wasn't as much as vol advancing. The biggest advancer we have out there was up about 1.25%. That's going out 3 months out there in the Eurodollar. Number 2, Class 3 milk moving a bit, but it's not even gaining a percent. It's up about 0.75%. So not a huge week for vol advancers, but there's some vol coming off. All right, Todd, it's a lot of table setting. There's a lot of places we could begin our journey this week. Which product category is really lighting it up for you? Where should we start first, sir?
Well, I think looking at the way things were over the last several weeks, equity volatility's obviously had a huge roller coaster ride, given what we've seen with the underlying movement and what leaves us with now implied volatilities. While the VIX and all those other indices are lower, we saw some pretty major spikes and some pretty fast recoveries. So I think there's a lot there as far as watching some of these equity volatilities moving in the pre, during, and post what we'll call the short squeeze era of stocks.
Yes, the short squeeze there. All right, we can do that. We can hang our hats then, listeners, for our first stop in equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, welcome to the equities segment. Todd, since you set our compass to here, we'll start with you. Obviously, as you mentioned, a lot's been popping off on the single name side with the short squeezes and GameStop. That's translated into a lot of action on the Russell 2000 side. A lot of these small cap stocks have been moving a lot as well. And as you also mentioned, Vol has been moving quite a bit. So what's been lighting up your tape over there at AMBROSINO Brothers from an equity perspective these days, sir?
Well, I think looking first just from 50,000 feet, the VIX index, boy, you would have thought you would have seen a VIX index get close to 50 on some of these movements, some of the shorts interest that was getting squeezed out, a lot of two-way trades because whatever goes up must come down. And what we really saw was the VIX, I think, limited. I got to as high as 37, came back. Now it's down back below where it started, that move. And it just seems that the more things change, the more they stay the same, in that the underlying indices all go back to shooting straight up and the volatility indexes all go back to down. So I think at this point right now, volatility, while we do have that short memory in equities, we have to remember that things can change very quickly. And we were shown that last week.
Yes, we certainly were out there. A lot going on from an equity underlying and a volatility perspective. Let's set the table out here from a vol perspective. Come into Showtime, our old friend RVX, which is the VIX of the Russell 2000 listeners. Remember, we've been saying for a while it's been just glued. It can't really break through that 30 handle. It's been 30, 30, 30 for a while. It actually gapped up to about 35 on our last show, so it got higher last week. This week, it finally managed to come in and break through the 30 handle ever so slightly. Just before the showtime, it was about 29 and change out there. Puts it a little over 6 handles south of where it was this time last week. VIX, the cash out there, we had about a 22, off about 5.5 handles from where we were this time last week. VVIX also moving quite a bit. 107.5. That's down 21, almost 22 points. If you're not familiar with that, VVIX is the volatility of volatility. So effectively measuring how fast VIX is moving. And it's moving quite a bit these days, but that VVIX number has come in. It was up to about 130 not too long ago. And VolQ, aka the at the money vol of the NASDAQ 100, is at about 22.5. That puts it down, about 5.25 points from last year. Puts that VIX to RVX spread, so the large cap to small cap vol spread, close to 2 points, a little bit shy of that actually, which is a lot tighter than last week, 5.6. I think part of that has to do with the fact that RVX finally came down a little bit. It had been glued and glued and glued up there, so now it was around 7 points last week. So that's come in quite a bit since our last show, which is kind of fascinating. And then the VIX to vol Q spread, about almost 4.75 points. It's a little bit wider, about almost 2.5 points than it was this time last week. Of course, Sean, in the intervening week, a lot's been happening out there in Russell 2000 land. Of course, I mentioned the big banger return for this week, but the numbers are in for January as well. A Russell 2000 beating out every other major index on the planet for January, up 5%. That beats the Russell 1000. It beats the FTSE. It beats everything out there. So you folks clearly wanted some small caps in January. And what's been driving a lot of this craziness? We had Matt on the show last week talking about the crazy call frenzy out there in Russell 2000. Well, a lot of that is still going on. We'll get to that in a second. But also a lot of this driven by these big moves in these single names. If you haven't been paying attention, you've been living under a rock for the last week. You know, this mad short squeeze in GameStop, and then Plug Power. Well, those are two names in the Russell 2000, and they've driven the valuations and their rankings in the Russell 2000 to stratospheric levels and then back down again. We had GameStop that was $1.3 billion in market cap at the end of the year. That catapulted to $28 billion at the end of January. That put it all the way up from 752nd place to approximately number 2 in the Russell 2000. And another target of those, Plug Power, a hydrogen fuel cell maker, that got driven up as well. That market cap more than doubled from $15 billion to nearly $32 billion. That pushed it up to, it was number 2, and then it became number 1 in the Russell 2000. So a lot going on out there. Russell 2000 is moving. It had the best month of any index last week. The vol is moving out there. What's been lighting up your tape, and what are you hearing from the clients and customers and end users out there, sir?
Yes, this dynamic in Russell 2000 is really interesting. But if you look back at the progress and the rally of Russell 2000 from Q4 of last year all the way through to today with the Russell being up another 5%, you've got momentum in small caps. And the momentum behind it is, one, you've got fiscal and stimulus coming from the government. Right, you've got also the upside pressure because of the COVID vaccine acceleration. So there's a healthy weighting of healthcare stocks in the Russell 2000. So you've got some really strong base momentum for Russell 2000 to be performing extremely well. And as we continue to come out of the economic strife that we have, and we continue to vaccinate Americans at a high clip, the Russell 2000, with the economy turning around, it's the potential of upside is there, and it's very strong. And then you put on top of that what's been going on in these stocks that are in the Russell 2000. It's just been a tremendous ride. It's very interesting to see. But you've got a strong base of good economic numbers. You've got the COVID vaccine excitement as well, and now you've got some stocks that have just been taken up in this frenzy that's been trading for the last couple of weeks, and it's really exciting. And we can talk about the new products. I'm really excited to get there too.
Yeah, there's a lot to unpack. Todd, I'm curious. You mentioned the single names and the vol. Everyone who's been coming on, everyone pretty much who don't even look at the small cap landscape have been kind of fixated on this index of late. Has that been the same over there at Ambrosino? Have you been seeing clients hitting you up talking about crazy upside calls and just getting long Russell 2000 as well there, Todd?
Well, I think one of the things, not specifically there, but I think what we are seeing now is this wing vol sort of explosion where maybe you used to be able to buy some protected puts, protected whatever you're looking at, calls for reach. Now those are going to all be more expensive because of this move we saw. And at least until we get through this and it just distances ourselves out of our memory, wing vol, which is usually used as insurance or maybe even throwing out a little bit of a hey, yo, I want to get involved but don't want to spend a lot. That's going to be a lot more expensive now. And that's a reflection of this move and a reflection of what we just saw. And when the market now shows a very one-directional move upwards, we got the down move briefly. Now we're back on upwards. Those calls aren't going to be as cheap as they used to be. So you're going to have to get very creative, I think, when you're structuring some of these to keep them cost effective.
Let's see. Talking about that crazy wing vol, that's something Matt was talking about on the show last week. That's been an interesting fixture of the Russell 2000 of late. Let's see if it's still going on. Coming into, as of a few minutes ago, the Russell 2000 just barely shy of the 2200 level. We haven't even had a chance to have our over 2000 party, and it's already almost 200 handles north of there. So that puts it up 6.25% just this week, listeners. So I guess if you factor that in, it could break into our top 5 there. Looking at where the most action was this week, it was out there in the week 3 February contracts. We got about 15 days to go. So that falls within our radar. We know most of the action is in the weeklies these days in the equities anyway. If you're wondering what that vol is, we just talked about RVX coming in a little bit. Let's see if that's also the case in these different contracts. Yeah, the at-the-money vol here in that week 3 contract at about a 24 puts it down almost 13 points. That got pretty juicy out there. That's a lot of vol coming in. In terms of the skew, let's see. The puts last week, 12.8% rich. This week, 15.4%. So the puts getting bid up. The calls, 7.9% cheap this week, 13.9% cheap. So the puts getting bid up. The calls coming in. That's starting to look more like a traditional equity. Maybe the mad surge to the upside is coming in. Maybe a lot of that has probably to do with that vol coming in pretty aggressively as well. Let's see what's lighting it up out here, and let's see if we can find out. Last week, it was pretty aggressive upside calls, as I recall, in particular the 2300 strike, and that appears to be the case again this week. In fact, that's out in March. The March 2300s are the most active contract out here this week in the FTSE Russell options, doing a bunch of paper, all of that opening, including a whole bunch yesterday here as well. So they were farther out of the money last week. This week, a little bit closer, but still the 2300s, so those kind of wing volatility that Todd was talking about earlier is obviously still very attractive, and the 2200s going up this week as well. So a lot going on, even though the week 3 in February was the most active month with about 29.5% of the paper. The actually most active trade out there was the 2300 call in March. So a lot going on out there. It's not out of the money calls anymore there, Sean. And speaking of what's going on out there in Russell 2000, before we keep rolling on with some other complexes, you guys have been busy over there, Sean, because obviously everyone's fixated on all things Russell 2000. So it seems like it may be an interesting time to add some new products to that mix, in particular getting on that smaller bite-sized train with these new mini Russell 2000 options that are coming, hopefully, if all the regulatory I's are dotted and T's are crossed, coming on March 1st, Sean. So in less than a month, we'll have 1/10 size contracts to sink our much smaller teeth into, sir. That seems like a good choice, given the fact that A, everyone's fixated on the Russell 2000, particularly calls right now, and then B, that everyone loves bite size. Look at the micro, Sean. So it seems like you guys are on the cusp of two trends that are working in your favor, sir.
We couldn't be more excited to be partnered with CBOE Global and launching mini Russell 2000 index options. And as you said, they're 1/10 the size of the existing RUT contract. The ticker symbol in these is going to be MRUT. They're going to be 1/10 the size, cash settled, PM settled, European style, which means no early exercise. So there's no assignment risk. And clients have all been gravitating towards a smaller notion of value. And, a smaller notion of value really helps investors, gives them flexibility, gives them more precision. They get to hedge or enhance their portfolio down to a smaller notion of value. So, yes, there's a strong institutional demand for this contract. But it also brings new players to this contract, which have benefited from the micros that we've seen over at CME Group that have been incredibly successful. So you've got a professional trader and retail market that are very excited about this product. So I think the timing's perfect. CBOE Global's on top of this. March 1st is a pending date again. Yep, they need just a couple of I's dotted and T's crossed with regulators. But we're very optimistic, and we couldn't be more pleased with the launch of this product. We've got healthy volatility. We've got an incredibly performing small cap index. And, the timing's absolutely perfect for launching a product like this. So we couldn't be more excited.
I kind of wish it was live right now, Sean. I think this thing would be doing gangbusters right now. The index is up over 6%. Everyone's fixated on all things Russell 2000 wings, as Todd was just talking about and as Matt was talking about last week. So I got a feeling, Sean, when this launches, it's going to do a wee bit of paper. What do you think?
I'm very, very optimistic. And CBOE's out there talking to the entire ecosystem about the product, and we couldn't be more excited. We are partnering with them in a big way. We're very excited about this. We want Chicago to be the home for small caps. So I think this is going to get us there. This is a good ingredient in the strategy to get us there. Let's put it that way.
There you go. I like that. That's a good goal. Chicago, the home of small caps. And you know what else is lighting it up out here these days in the markets? I talked about our light side. It was pretty much dominated entirely. Once you get past Russell 2000, it's all energy. Heating oil number 5, Brent number 4, nat gas number 3, and WTI number 2. I think we got to take a stop next in energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, let's do it. Let's talk energy. Todd, the energy complex has been on fire over the course of the past week. So what's been lighting up your tape out there in energy land, and is there a particular product amongst this list that you'd like to focus on, sir?
Well, we watch the WTI. We do watch Brent as well, but WTI seems to catch our eye more than anything else. And, over the summer, going back a little ways, it seemed like there was a cap on that, and it was just going to kind of wait and wait. Then we got vaccine information. Now we're talking about the economy expanding. Now you're talking about a number of buyers overseas buying and holding. And we've just seen a major shift here. Not only in WTI, but you also see it at the gas pump. But it seems at this point right now, expectations are playing a big role in this shift because the move that we've seen from just November to January has been pretty remarkable. So right now, I think things are very hot in WTI. I wouldn't expect them to cool down anytime soon.
Yeah, things are certainly hot. Coming into showtime, WTI 56 and a quarter. That puts it up 7.75% just this week, just since Monday. So a lot of people thought maybe that rally had petered out. Then we saw some interesting numbers coming out earlier this week to just driving us higher here. If you're wondering how much paper on the tape right now, about 470,000 contracts already on the tape for WTI. So a pretty active week. Of that, about 38% coming in the March contract, which has about 13 days to go. So it's right at our 2-week cutoff period. So I think we'll make an exception for this one. If you're wondering what the vol is out there right now, it's almost a 31, about 30.75. But still, that's off about 5 points from where it was this time last week. So the vol actually coming in on this big move, which is kind of interesting. And then we have skew-wise. Last week, the puts were 8.6% rich, so that vol is already pretty high, about almost a 31. The puts, 8.6% bid to that last week. This week, much more, 20.2% premium to the puts. So get a feeling maybe some folks are feeling a little bit of a fade here. 5.7% cheap were the calls last week. This week, nearly 10%. So we're rallying pretty hard out there. Puts getting bid up, calls coming in. That's kind of the natural evolution you would expect when you're moving up the skew curve like that. The vol coming in probably also playing a little bit of a role in that. But interesting stuff out here. Big bid to those puts there in March. Let's see what the most active, the number one contract was this week. Looks like it was, looks like it's the 50 puts, which, again, not entirely surprising, given the fact that we're north of that strike and people in WTI tend to like the even money strikes out here. Total of nearly 20,000 contracts on the tape this week. The most active day was yesterday, nearly 7,000, 5,000 so far today, and about 4,100 on Tuesday. Monday, about 3,700 out there. It's back and forth, opening and closing both days, so it seems like a lot of back and forth paper on this strike this week. Then we also have the double calls, 55 calls coming in at number 2, with about almost just a tick under 15,000 contracts, the lion's share coming on Tuesday, actually almost half of it, 7,200 coming on Tuesday. That was slightly closing, so maybe we break through those double calls, they take them off the board, and they reestablish in coming days. Either way, a lot of paper going up on Monday. The lion's share of that seems like it was closing out here. Interesting stuff that also would be in keeping with what we're seeing from a skew perspective out here. Interesting stuff. Let's see if the other strikes that are catching our eye across the board. Also, 10,800 of the 65 calls trading out here in May this week. So that's an interesting strike. And if that's not bullish enough for you, you got almost 7,000 of the 70 calls going up out here in June as well. So upside strikes starting to light it up. 60 calls going up in Dece as well, 8,000 times this week. So the narrative for a long time has been, fade the rally, fade the rally, fade the rally. Of late, that rally's had some teeth. Maybe some upside papers deciding it's no longer the case to fade this anymore. I'm not seeing, used to see a preponderance of 30 puts, 35 puts popping around out here. You don't see as many of those out here. So perhaps, even though the puts are very bid in that front contract there that has 2 weeks to go, that March contract, outside of that, I'm not seeing a lot of put action out here, which is kind of interesting. It's dominated mostly by calls, which is kind of fascinating and perhaps tells a tale. Maybe the worm has turned out here in WTI. I want to look really quickly at nat gas as well, because I know Eric has been pretty active out there on the nat gas research. He put out an interesting new paper out here as well, talking about nat gas exports underpinning as demand slips. He points out, obviously, very volatile contract out there in nat gas, and the implied vol often among the highest of the exchange-traded products over there at CME land. Let's see if that's the case right now. And storage levels, it's an interesting paper. Check it out for yourself. It's called U.S. Natural Gas Exports Underpin as Demand Slips. We could probably do nat gas just about every week. It moves that much, listeners. Of course, it is a cheaper product, about $2,948, almost $295 coming into Showtime, up about 15% since Monday. The most active contract is going out in March in about, looks like about 19 days or so. Let's do a quick breakdown here. If you're wondering, he talks about that vol. It's one of the most active and most volatile products they have on the exchange. Well, that front contract's at a 61 vol right now, so Eric may be onto something there, even though that contract isn't that long for the world. Still, that's a fair amount of vol. Skew-wise, last week the puts were 5.2% rich this week, or excuse me, cheap. This week, they're pretty much flat, so the puts are in line with the at-the-money, which is interesting. The calls last week, 6.8% rich. This week, 2.1% rich. The calls coming in, the puts kind of flat. Puts getting bid up. That's kind of interesting. The vol, by the way, also ticking up to 61. That's up 7 points from last week. And the most active contract by a country mile out here. If you're wondering, by the way, there are 551,000 contracts on the tape in nat gas, which is crazy for a $3 future to have that much option paper. But it does. 3.5 calls, 67,000 going up in this contract. So this was just hot and heavy all week long on these 3.5 calls, which are over half a dollar out of the money here. They did 12,000 on Monday, 15,000 on Tuesday, 31,000 on Wednesday, 9,000 today. Looks like a chunk of those on Wednesday were closing, but the rest of the week was back and forth opening and closing. So a lot of back and forth action on this strike that is substantially out of the money. That's surprising and perhaps not what I expected out here. You know what else I didn't expect is the entire trading world to be fixated on silver. So I think we'll head there next as we head on into the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, welcome to the metals. And, I won't say we broke this by any means, but it was one of the early shows on our network, at least, to talk about this. It was last week. Matt was talking about how he had seen some of the online chatter, the online scuttlebutt, that silver might be the next name to be in the crosshairs of all these short squeezers out there. And sure enough, last week, we did see a preponderance of upside calls dominating the tape out there in silver. Well, fast forward a week, and the much-anticipated short squeeze everyone was looking for didn't exactly materialize. Silver come into, as of a few minutes ago, 26.40, off nearly 2% on the week, so not exactly the big upside swing everyone was looking for. Todd, were you paying attention to this silver drama? Were you buying into this short squeeze hype out there in silver? And more importantly, were your clients over there, sir?
Well, silver was making a very, very good argument for higher prices prior to the short squeeze story. It's made a big move now. Seeing silver move $5 in 3 sessions is almost unheard of, and that's what we saw on this short squeeze. And I think there was some reaching there. You saw some SLV calls being purchased, maybe the 27.5, 28 and up strike. And they were reaches because they got into the game a little late. So it seemed that pumped everything up a little bit. Was during the move, you had those that were trying to take advantage of the move, and it never quite got there, and things fizzled out shortly after, as you just said. I think silver right now, it takes a backseat to its older brother gold, which typically gets the spotlight, and gold obviously having its own problems today. But I think that silver, if it can kind of hover here, is still there's still fair value here if you can get back to around that 25 level, given the fact that silver has all those industrial uses. It's not just a store value like gold. I think there is still some upside there, and I think volatility in silver, which is now going to probably be a little higher than it was, say, a month or two ago, will probably be warranted given the fact that we saw this move.
Yeah, we were speculating about this on our later shows and earlier shows this week as well. We saw people talking out there in the broad media that silver was somehow setting up like GameStop, like it was a similar market. I heard it described as heavily shorted and illiquid, and those two things are not really what we were seeing out there in the silver market. It certainly was no GameStop, this notion of this absurd overextended name out there. So the illusions and certainly a lot more liquidity to back up out there in silver to be able to take some of these moves. And that's kind of what we saw. As Todd mentioned, we did see a big move, but it faded pretty quickly. So it was a short-lived move, and it didn't have the extended run, the extended legs that I think a lot of the squeezers out there would have preferred. If you're wondering how much silver does, these days it's a pretty active contract. 104,000 contracts on the tape for silver. That's up a lot from what it used to be not too long ago. So silver clearly doing the numbers right now. In terms of where the action was this week, it was the March contract, has about 19 days to go, doing 57% of the paper out there this week. Now let's see, vol-wise, silver vol got up there, as you might imagine. Not quite the 1,000+% level of GameStop that we saw briefly, but pretty rich for silver. I mean, silver right now is almost 40 vol, 39 3/4, and that's off nearly 21 points just over the course of the past week. So the vol got bid up to astronomical levels, and then it got annihilated ever so quickly. So what squeeze there was, what attempt there was to bid this up, it bid up the vol, but it came right back in very quickly. In terms of skew out here this week, the puts last week 5.7% cheap. In this March contract this week, even cheaper, 12.7%. The calls, 8.2% rich. This week, even richer, 12.4%. So interesting. There still is a bit of a bid to the calls out here. Let's see if we can find what's afoot out here this week. Last week, it was all upside calls. This week, it seems to be the same tale. 35 calls. That's the most active contract here this week in March, doing almost 5,000, 4,800. Of these bad boys, which is a decent clip for silver. Most of that coming on Monday. Surprise, surprise. All that short squeeze was really popping off in silver. Everyone was trading the 35s in March, mostly opening, 3,000 of them going up that day. 1,100 going up on Tuesday, slightly closing. That makes some sense. Some folks maybe getting the heck out of Dodge. And then more opening, actually, about 1,000 almost on Wednesday, and then kind of nothing today, only 68 today. So it seems like that short squeeze, it was short-lived, and it kind of went out with a whimper. Not much action there today. But the 30 calls were also pretty active, and those are a little bit closer to the money. They did about 4,600 contracts. Similar story there, about 2,500 on Monday, actually slightly closing, which is surprising. 1,000 on Tuesday and about 700 on Wednesday, a couple hundred going up today. So 30 and 35 calls in March were the order of the day out here this week. Most of that trading on Monday and a little bit on Tuesday, which, again, not exactly surprising. But it didn't stop there. 50 calls did 3,500 contracts this week, about 2,700 on Monday. So folks were getting a little outlandish with some of their strike selection, shall we say, out there, going all the way up to the 50 strike for decent size out there. So they did try to come for it here. It just didn't materialize the way they thought. Again, a lot of people maybe not having a strong understanding of the underlying mechanics, what's going on out there from an order, from a volatility, from a liquidity perspective. In silver, that makes it markedly different from something like a GameStop. If you listen to our option block show on Monday, we said this squeeze is probably not going to materialize the way people think, and that's pretty much how it played out. Let's look here really quickly, any outlandish prints. We got 60 calls in June, went up almost 1,000 times this week, so some folks got a little bit outlandish, even beyond the 50s, with the 60 strike out there. So fascinating stuff. Todd, you mentioned gold as well. Let's pull that up really quickly. Gold's been having its own issues. It's not exactly a short squeeze name. It's different. Gold is usually where the metal story begins. It's surprising to show that everything's fixated on silver right now. It shows how the worm has turned. What's been lighting up your tape and for your clients out there in gold of late, sir?
Well, gold obviously looking today like you're seeing this technical moving average cross that's caused a lot of bit of negative price action. Likewise, you get these interest rates start trading up, and gold can't compete with that. Gold right now, from a fundamental standpoint, is going to have some downside. So keep an eye on those puts to the downside. They're going to start to get richer because obviously today we made a big move. where's the bottom going to be on this? And I would expect to see some put vol or some put skew start to come back into the picture, despite what the Fed's doing, despite what we don't know about the economy. Gold's obviously seen a very big move today, and I'm not sure how much more it has on that, but certainly should be seeing some put skew.
Well, let's find out. Coming into this segment, gold 17, just a little bit below 1795, 1794.8, puts it off 3% on the week. The most active contract out here this week, listeners, also out to March, also has about 19 days to go. If you're wondering what gold vol has been up to of late, gold vol, we said it many times, is kind of a bit of a weird beast, kind of hard to really get it bid up. When it gets bid up, doesn't stay there very long. It's looking decent right now at about a 16.5, puts it off a little, almost about 2/3 of a point. So it was about a 17 last week, it's about 16.40 and change right now. So that's actually fairly elevated from a gold vol perspective. Let's see where the skew has been lining up. Last week, the puts 2.6% rich to that already decent 16.5 or so level. This week, they've come in quite a bit, 3.4% cheap. So puts coming in. Calls last week were almost unched to the money, not even 1% rich. This week, 5.7% rich. So the puts coming in, calls getting bid. Again, not surprising maybe, given the fact that, we're moving down the skew. But usually if you have a sharp move, you expect the puts, as Todd was saying, expect the puts to get a little bit more bid. Let's see if we can dig in and see what's afoot out here. 32% of that paper going up in March. The most active contract of the week out here looks like the 1800 puts, which again, not surprising. That's pretty much an at-the-money put right now. That did 6,400 contracts. By the way, if you're wondering how much paper gold putting up, 2.25 times more than silver, 225,000. We're at just a little bit north of 100,000 for silver out there. So give you a little bit of a frame of reference between the two products. 1,800 puts doing 6,400 contracts in March this week. The lion's share actually coming today. Again, referencing that big move today that Todd was referring to. 3,500 going up today, 1,400 yesterday. The rest kind of scattered throughout the week. So obviously we don't have OI numbers for today's paper, but given what we're seeing out there, maybe some folks are closing out or blasting away on some of these puts. Again, if you broke through the 1,800 strike, people may be taking those off and deciding to put that money to work somewhere else, which could be accounting for why we're seeing that put skew actually come in a little bit. Let's also look really quickly. 1,700 puts, so about 100 handles out of the money, also active this week. They did about 5,200 contracts. Once again, the lion's share today. 4,700, 5,200, all going up today. So a lot of puts in the near term going up today, which is interesting, just not maybe in the way you might assume. Let's look really quickly here to see what else is lighting it up. It wasn't all puts, listeners. There were some calls lighting up this week as well. Let's go out to April, and let's go out to the April 1970 calls. They did about 5,100 contracts this week as well. That's an interesting strike. Not quite 200 handles out of the money. And they did all that paper, 5,151, 5,090 went up today. So looks like 2,300 of the 1900s went up as well. So maybe a funky 1x2 there. But there are some weird strikes afoot there, that's for sure as well. So it's not all puts all the time, but there are some calls in there. But there were a lot of puts, and then the months that had them, the put skew actually came in, which is kind of interesting. But again, we blew through that 1,800 strikes. That probably has something to do with it. That was a pretty key strike, and once we blew through it, the folks obviously not holding on to those puts, taking them off and deciding to readjust. That could be a sign in of itself. Maybe this rally this sell-off may be petering out a little bit here. We'll keep an eye on this. Let's look really quickly. We always like to have some weird strikes in gold as well. And actually, this isn't that weird anymore. The 2000 strike, we were there not that long ago. That lit it up this week out here in September to the tune of 6,000 contracts. That was actually a pretty active contract. That's actually close to actually on number 2. Actually, I take that back. That should have slotted in at number 2 out there in September. 6,000 of the 2,000 calls going up in September this week. All of that today. 6,002 today. So a lot of paper on the tape in gold today, and not all of it perhaps what you might think. Todd, does any of that paper surprise you given what you were thinking out there in gold, sir?
No, I think I'm a little surprised when I'm seeing more put spread selling, I guess, would be the key, because you're right. We hit the 1,800 strike. When you get to your level, you typically get out. Gold certainly, has a lot better story for gold going higher here at this point. given the environment. But certainly, when the dust settles here from today's move, how it reestablishes should be pretty interesting.
All right, Todd, we got time for probably one more product before we squeeze on the listeners. So it could be something from one of our movers and shakers here. Perhaps there's another complex that's really lighting up your tape over there at Ambrosino, sir. So where should we point our gaze next?
Well, looking at some of the, did you mention Eurodollars in one of your rallying or something?
Yes, they were on our vol movers this week. There was a 90-day Eurodollar was our top vol advancer this week.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
Okay, I like that because I think right now, when you look at rates moving higher, there's been a propensity to move it out the calendar a little bit. So there's been a lot of activity on the put side there, obviously for rates to go higher. It doesn't surprise me that we're seeing higher vols in rates. We're seeing that in the Treasury complex as well. Obviously didn't quite make didn't make the list this week, but certainly the reach for higher rates longer out the curve, longer out the calendar seems to be a new trend here.
Yeah, we just had our folks from Demand Derivatives on our last show. They analyze a lot of realized vol, and they were saying they're seeing some interesting upticks in realized volatility. You're right, longer out in the curve a little bit, which is an area that is notoriously, shall we say, volatility anemic. Not much vol out there at all. You're talking a couple of percent maybe. So some movements out there from a realized vol perspective is maybe something of interest and something of note. Let's go out to Eurodollars. This is, of course, the big dog over here at CME Listeners, doing 2.1 million contracts so far this week. So sometimes trying to parse the paper out here is like spitting into a hurricane. There's just so much going on out here. In terms of where the action was, again, it's also very spread out. We were talking about the 90-day earlier. Let's look there. That contract didn't do a lot of paper out here this week. Let's find the number one option trade, and that'll point us in. Again, you're talking pretty sizable trades out here, listeners. You're talking 54,000 lots. You're talking even more than that on occasion. Seems like our biggest trade out here this week were the 98 and 7/8 contracts coming out here in the June contract that has about 130 days to go. So a little bit farther out, like Todd was saying. That did 67,800 contract, which is kind of surprising, given if you know anything about Eurodollars, that's kind of light. We've talked well over 100,000 on some of these contracts and trades out here. So an active week out here, but kind of a dispersed week in terms of paper. There's no one area where it really seems to be lining up like crazy. If you're wondering, the vol out there, by the way, it's 11 1/3, off about 2 points. It's actually fairly juicy, for at least it was for Eurodollars. Has come in quite a bit over the course of the past week. The skew-wise, the puts last week were leading the dance, 8.1%. In this June contract that has about 129 days to go. This week, the puts are 6.5% rich. The puts coming in a little bit. Calls last week, 5.9% cheap. This week, 8% rich. The calls have been swung up to the upside. Again, that's where you're talking about their interest in the upside there, Todd. That seems to be the case out here. The calls swinging dramatically. I think the 70 almost 1,000 of these 99 and 7/8 calls probably having something to do with that. Let's break down this trade really quickly and see how it broke down throughout the week. Yeah, they did 34,000 on Monday. That was mostly opening. That's obviously what's going on with the skew there. 14,000 on Tuesday, and then another 19,500 on Wednesday, and then zero, none today. Not even a one lot. I love how these Eurodollars can print size, and then nothing. It's a fascinating product to watch just from that perspective alone. So 99 7/8 calls here in June were the big dog out here. And that strike seemed to be the strike across the board. You said 52,000 of them going up here in the March contract as well. So 99 7/8 seemed to be where the action. It's also refreshing just to talk in 16ths and 8ths again. Brings me back to the old days over there, slinging things like the S and all sorts of fun. Now it's time, though, to sling some of your questions. It is time for your Futures Options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, let's get to it. You guys have a lot of things on your collective brain out there this week, including, let's start this off with this one from LBLT, because this question reflects what a lot of you were thinking about this week. LBLT wants to know, do you guys expect this GameStop shorting frenzy to have severe regulatory implications for all products going forward, including commodities? That's interesting. That's an interesting topic. In fact, we asked a very similar question of you folks out there this week. We said, there may debacles that left long-term lasting impacts on the options market. The 87 crash, long-term capital management, the dot-com crash, and the great financial crisis, just to name a few. Should we add the GameStop frenzy to that list? We gave you two choices. Yes, it's a post-GameStop world, or no, this is a tempest in a teapot. Sean, maybe we'll start with you. What do you think from our listener question? Do you think this is going to have severe ramifications from a regulatory perspective going forward? And then B, what is your vote, and what do you think our audience is voting for in our poll? You think this is we're all living in a post-GameStop world from a regulatory perspective, or is this more of a tempest in a teapot, sir?
Regulators are all going to take a look. There's going to be a lot of analysis. There's going to be a lot of opinions. There's going to be a lot of a discussion about protecting the individual investor. The jury's out on this one. I actually I don't know which way this is going to go. My personal opinion, that is.
Sean's in flux. Todd, maybe you can clarify it for us. What are your thoughts for our listener? And indeed, what are your thoughts on our poll? Which way are you going, sir?
Well, I agree with Sean. I think that this is going to be, there's going to be committees and there's going to be meetings and task force. And at the end of the day, the information that was put out there seemed to be pretty transparent. I don't know that. And I think that's why you're going to have to get to the bottom of it. So I think we are going to be living for the short term in a post-GameStop type of world. I think over time things should normalize, and I think the one lesson I think that was learned out of all this was that short interest stocks with a high level short interest stocks need to be wary of a squeeze and a collaborative squeeze. So that could be something to keep your eye on.
I think we're definitely going to see some more reform coming on that short interest, short selling side of the fence. Reg Show clearly not doing its job out there these days. Our audience is kind of mixed as well. They were leaning heavily towards, yes, we're all in a post-GameStop world. That has since diminished a little bit. Right now it's about 56% saying yes and 44% saying no. It's a tempest in a teapot. What do you guys think? Head on over to @options, make your voice heard. But I do think we're going to be seeing some regulatory ramifications from this for some time. Hence my vote probably for the yes category there. All right, let's move on to, Sam. Sam was listening to our show last week when Matt was talking about how the Robinhood effect is being really felt in the Russell 2000 now, how small accounts are gobbling up any calls that will fit into their accounts, particularly 5 Delta and smaller calls. And Sam wrote in wanted to know, so is the options market fundamentally broken? Another interesting, our audience is full of interesting questions, because that's also one we were putting to you last week on our show, because we heard in the immediate run-up to this GameStop frenzy, it spilled over into other things, including obviously the Russell 2000. And so people were saying, are out-of-the-money calls being fundamentally mispriced now? Do we have to change the way we model these going forward? So we asked you guys that question as well. We say, is this frenzy around these short names, should we change the way we price out-of-the-money calls? Yes, this changes everything. No, this is a joke, or what the heck is happening? And you guys overwhelmingly, as I hoped you would, said no, this is a joke, 74%. 16% said yes, this changes everything, and about 9.7% saying what the heck is happening. I understand the latter there as well. So no, I don't think, Sam, that this means the options market is fundamentally broken. In the case of the Russell 2000, that was people just coming in. They wanted to express some upside interest. You can maybe call it hyperbolic or maybe overdone. Of course, the moves of the last couple of weeks maybe back that up, that they weren't overdone. But people were expressing that interest. They had smaller accounts. That's what they could afford, the far out of the money wing type trades. And at least so far, it seems like it may have worked out here. He also chimed in to say he thinks changing out of the money call prices will impact not only people buying calls, but also people selling covered calls or having to close their covered call positions, which is quite unreasonable and perhaps also impractical. Yeah, it is very unreasonable and impractical to somehow think you can make market makers add some X percent to all of their call wings. That's going to be, you're right, they're going to be sucking down a lot of calls. People are going to be selling a lot of calls to them. And then what's going to happen? They're going to lower that volatility as a result. So the market will win out at the end of the day. There's no way you can artificially come in and say, hey, all out of the money calls now need to be 12% higher, whatever the number is, because it's untenable. And the market will dictate where that level should be. Right now, there were people dictating that they thought it should be higher in that wing. And the market makers responded by jacking things up very quickly. But it was short-lived, as we saw out there. Sean, anything to add on this? Because he's talking about your baby here, Russell 2000, and the extreme level of interest we saw in those 5 and lower delta calls, sir.
You know, that call buying began way before this frenzy in these individual stocks. And index performance is index performance, and the constituents within that index are going to move the index. And of course, we have this frenzy going on. The option market isn't broken, and this call buying was an interesting dynamic in these individual stocks. But the upside call buying that Cboe Global and CME saw in their Russell 2000 options were very large trades, and they continue. So it's a market where investors can invest, hedgers can hedge, and those that want to harvest volatility have that tremendous opportunity in these options. So market's not broken. I'm just excited that liquidity is there for the client.
There you go. Not broken, maybe just short-term exuberant, let's call it. All right, let's finish up. We're running out of time here. Let's go with a quick one here from Brighton Capital. He's also was listening to our show last week. He said, I enjoyed the interview with the guy from ORATS, as he puts it, Matt. He says, the comment about crypto was funny. He quotes him saying, I've been involved with it for nearly a decade, but I'm still ambivalent about the whole thing. Translation, I've made a boatload, but the volatility is scary, even to a vol expert like me. Well, I'm not going to put words in Matt's mouth. I'll have to ask him what he thinks of this. But I have talked to him about crypto for a while. In fact, I had him on a panel with me about crypto about 3 years ago. So we've been talking about this for a while. He's been ambivalent a lot of that time. I mean, he was interested in it. He was doing stuff with it. As I joke, he tried to sell a house in it a few years back. So he has been interested, but I think he's always tampered his enthusiasm. I think it's some of the old school market maker in all of us. It's kind of hard to beat out that cynicism at the end of the day. And when you see a market that's as hyperbolic as Bitcoin has been for the past few years, it's hard to come at it and not be somewhat skeptical of that. So I think some of that is probably well earned. I hope for his sake, I hope he has made a boatload out there trading it. So I can't speak to that, but I think the old school cynicism I think is kind of hard to shake on all this stuff. Great comments, great questions. I'll keep them all coming. All right, unfortunately, that music means we come to the end, man. An hour flies by when we're talking all things futures options. But before we go, Todd, if folks are intrigued, maybe they have questions, they want to reach out to you guys over there at Ambrosino Brothers, where should they go? What should they do?
You can reach me on Bloomberg, tcolvin14 at bloomberg.net. I'm there all day, every day.
There you go. And you got any hints, any teases, what you guys have coming up over there at Ambrosino Brothers? Now is the time, sir. The floor is yours.
Well, I think we're going to keep an eye. We primarily have been focused on our interest rate business here over the last several months, and I think this is where we're starting to see, we could see a potential breakout. Obviously, the economy's changing, the vaccines are coming. That's going to put a little less heat on the Fed, which could give interest rates a bit of room to run to the upside. So we expect interest rates to continue higher here in the short term.
There we go. Interesting stuff. And Mr. Sean, you guys are obviously cranking away on all the things going on in Russell 2000. People are obviously trading it like crazy, but also you got some new products cooking. So if folks are intrigued, maybe they want to check out the new products before they launch. Where should they go? What should they do, sir?
Well, the best place to go for information on those new mini Russell options CBOE Global's launching is cboglobal.com. Please go to CBOE's website. If you have questions, you can come to me, and I'll put you in touch with the subject matter experts over there, or I'll try to answer the questions myself at sean.smith@lseg.com. Very excited about the new products coming out. And if you want a nice blog on the recent activity involving the stocks within the Russell 2000 with the Reddit trade that's been going on, go to FTSERussell.com/blogs. Our Philip Lawler has put a nice blog with some interesting statistics on those moves. So feel free to go there as well. And again, Mark, thanks for having me on the show today.
Happy to have you. Check them out over there, FTSERussell.com. All that research, they have been doing a lot of it. All these things you guys are asking us about, the upside, the crazy moves in Russell 2000, how it shapes up versus other indices, how the GameStop frenzy is reshaping the index, all that stuff can be found over there at FTSERussell.com. And you know where to go if you want to find the reports I use throughout the show, or perhaps you want to check out some of these research papers I was talking about, like Eric's paper on nat gas and a whole bunch more. It is, of course, cmegroup.com. I'm going to have Mr. Tim McCourt, who heads up equities and crypto, join us on the show next week, because guess what? ETH futures are launching next Monday, so we'll have a new product to talk about and sink our... We didn't even get to Bitcoin today. That's how much is going on out there. So we'll have a new crypto product to sink our teeth into next week. We'll break it all down with them next week. It should be fun. And, of course, we're back again tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. It all kicks off again next week with the option block all the way through to Thursday, another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.